Hello. I want to take a minute and show you and compare and contrast the general journal and the general ledger. Now, the general ledger is where we keep track of the balance of accounts. So if you want to visualize it the way I've put it together here as a three-ring binder. And in this three-ring binder, I'm going to have a page for every account that we use in our business. And on each one of these pages, we're going to keep track of the balances, the running balances of the various accounts. So we'd have one like I have here for cash. We'd have one for account receivable, anything that we're recording in our business. And every time we have some kind of transaction, we're going to come in here and we're going to add a debit or a credit, depending on what the normal balance of that account is. And we're going to add and subtract those balances. So you can see here that I have a page for each one of these accounts that we're going to deal with. Now, the other book that we deal with is called the General Journal. And this is a diary. This is a chronological diary of business transactions. This General Journal is really nice for keeping balances, but all it does is keep balances for us. If we want to know what is happening in our business on a daily basis, we go to the General Journal. So in the General Journal, every time I have a transaction, I'm going to list them in chronological order. I'm going to list the names of the accounts affected, the debit, the credit, and then I'm going to have an explanation of what happened. So then if we take this information and we transfer it over into the ledger, there's my cash account. And in this case, it was a transaction for sales, then I can keep track of the running balances. So these two work together. This is a chronological listing of daily activity, like a diary, and this keeps track of the balances of each of those accounts.